Alright, hello, and welcome to Camel Finance. I'm your boy Camel, and got to start with a little bit of news from yesterday. Her Majesty Queen Elizabeth II has sadly died as of 6:30 last night. The Bank of England has issued a new money statement as they plan to change the head on the notes and the coins to King Charles. So they have started this immediately, and I just wanted to point out a couple of things. That this may well be the start of a new era, and in crypto, we've got our new PM, our new Prime Minister, Liz Truss, and she is reaffirming this crypto pledge. And the Treasury Secretary says the UK wants to become the dominant global hub for crypto technologies through financial services and markets bill. So this may well be the end of an era for money as we know it. Scrolling down here to private push, you can see that it was just over 2 weeks ago that a new privately led consortium instigated a new push for digital currency in the UK, with the likes of IBM, these other places forming the new group. This is no slouch in terms of credibility. That's why the push for what they're calling Project New Era, a terribly fitting name, is something to pay attention to, because as their press release states, the group will focus on real-world testing to evaluate future digital currency ecosystem, environment and economy that includes the coexistence of current forms of money, regulated digital assets including cryptocurrencies and stablecoins, and the central bank digital currencies CBDC. Starting in the UK with Project New Era. This thing seems to be accelerating. I am going to cease to talk about CBDCs as it was all covered in yesterday's video. So if you didn't watch that, go and watch that. And in the meantime, Bitcoin is starting to look rather healthy. Bitcoin is getting a bounce. The cycle low may well be in, although it is a Friday. Then we got the weekend pump most likely, and I wouldn't be surprised to see it sell off early next week before we get the CPI print. So I will get to that in just a minute. But first of all, I want to remind you that Bitcoin is ripe to outperform. There's nothing else like Bitcoin out there, and I have to agree with this, that when Bitcoin gets going, the sentiment, it swings so wildly. It's been so bearish for so long. People are convinced this thing's going down to near 0 or 3 or 5k, 10k at least. Loads of bids are stacked under the prior low, and for me, I've been saying this over and over again, the path of most pain would be to the upside. That would catch the most people out. Bitcoin and the Wyckoff method. So if we click here, we can see that we have basically put in a textbook Wyckoff accumulation distribution pattern, and we are now in the final stage. As you can see, the final accumulation for Wyckoff, drop into that November cycle low and then go. Meanwhile, the fundamentals continue to dominate. We are at a new high, over 4,700 Bitcoin on the Lightning Network. So if the digital gold is still the mental model you're using to reason about Bitcoin adoption, you're falling behind. It is, of course, a digital gold. It is superior to gold in almost every way. However, this is becoming a usable currency, thanks to Lightning. It's for these sorts of reasons that Bitcoin will likely be one of the best performing assets over the next decade. And Fidelity is launching a Bitcoin trading for retail customers in November. Right at that cycle low, they're going to open the floodgates to $4.3 trillion in assets under management. The tsunami of money is about to start flowing. I think I'll put it in the thumbnail today. As of today, I'm going to get a little countdown to bull market timer, and I'll put that in the thumbnail. Meanwhile, Jay-Z and Jack Dorsey, they've got a Bitcoin Academy, and this has airdropped each student a grant of $1,000 in Bitcoin at the completion of a 12-week course. So when they can prove they understand Bitcoin over a 12-week course, they can gain a $1,000 Bitcoin grant. I posted this on the 25th of August saying this is what I expect the bottom to look like. So I'm going to leave this and we'll come back to it at another point. What happens in the meantime, nobody knows. Seems like we might be getting that bounce up at the moment, but I think the key point here is we're going to drop into this low around the 11th of November, and I believe that that is going to coincide with the beginning of the true bull market for Bitcoin. So I think we're only around 60 days out. I'll put a countdown timer in the thumbnail, as I've said. Let's keep going. Coinbase, FTX, Binance and other exchanges all fall under SEC jurisdiction, according to the SEC chair. So are we going to see them come after exchanges? Are they going to start putting pressure on these exchanges and trying to lock retail out? Who knows? That remains to be seen. But something that gives me confidence is the SEC at the same time has supported the CFTC, this is the Commodity Futures Trading Committee, having oversight of Bitcoin, meaning that Bitcoin will be treated as a commodity like gold or like oil. Little bit on energy, only a couple of tabs. Swiss authorities threaten with prison for heating your house above 19 degrees. Now, is that true? That seems a bit extreme. What are they going to do? Come to your house and measure it? I guess if you've got a smart meter, this is the kind of evil that comes with said smart meters. Meanwhile, the UK Prime Minister Liz Truss has announced plans to limit typical household energy bills to £2.5k a year for the next 2 years. But this is going to cost £100 billion. So check this out.
This government is moving immediately to introduce a new energy price guarantee that will give people certainty on energy bills. It will curb inflation and boost growth. This guarantee, which includes a temporary suspension of green levies, means that from the 1st of October, a typical household will pay no more than £2,500 per year for each of the next 2 years while we get the energy market back on track. This will save a typical household £1,000 a year. It comes in addition to the £400 energy bill support scheme. This guarantee supersedes the Ofgem price cap and has been agreed with energy retailers.
Okay, so inflation's not really going anywhere, and this is why we need a hard form of currency. Prince Philip of Serbia, he recognizes this. He says we need a hard money immune to inflation, and Bitcoin is the solution. And of course, Bitcoin is the solution. It's the only thing that is inflation resistant. We've got a change in character for the S&P. Things are starting to look better. We've had a trendline breakout on the 4-hour chart as of a couple of days ago. The RSI has entered the bullish zone. The MACD crossing above the 0 line. All of these things are bullish. The Nasdaq McKellen summation is showing that last time we did something like this, I moved from negative 1200 to plus 400. It's always led to dropping returns 6 to 12 months out. Is that where we're going? Is there more gas left in this goose? Is there one final blow off move? I think it might be. I think all we need to see is that CPI print catalyze the rally on Tuesday. Looking at the dollar here, is this the top for the dollar, or is this another pullback and go? That remains to be seen. I think, as I keep saying, as I've been saying over and over again, we'll see how Tuesday's CPI print comes. If that can be shockingly low or even just low, then the dollar will likely cool off a lot and risk will rally massively. Looking at the S&P 500 here, there's a good chance the cycle low is in. There's a good chance we've got an early cycle low, so that remains to be seen. For now, I want to play patient. I wouldn't be surprised to see some sort of rejection. If we don't get a rejection and we just go super full bore bullish, then the breakout will come for me at this trendline break here, this downward sloping one here. So, in fact, we don't need this. Let's clean this chart up a bit because we don't need any of this anymore. All we really need is that, right? So the yellow denotes the cycle low. That would be a perfect cycle low. The trendline break of this will be a trigger for a long if we can't get in on a cycle low. Preferably, I'd like to see it bounce up here, drop down into that Tuesday, and then we get a low CPI print and we can go. If not, we'll be entertaining shorts. So it's Friday, not looking to take on any weekend risk. Not my style. It's pretty much the same deal for the Nasdaq, really. If we break this trend line, then this can be a long, but I think it's better, given that we've got the CPI print on Tuesday, to play patient. A rejection here and a drop, particularly to sweep this low, would be a perfect buy zone for me. So hopefully that's what we get, but obviously I can't force the market to do anything, so we'll see how it goes. Volatility is compressing. I would expect maybe a little bounce that fails, assuming I'm right about the CPI print. And the UKX, you could have traded this. This is not really for me. We'll see what happens here. I'm okay to let this one go in the meantime. Real looks like it might be completing its Wyckoff spring, so perhaps we can entertain a long from down here, but again, not looking to take on any weekend risk. But probably as early as Tuesday, I think we can start to get some risk on across all of these markets I've shown you so far. I notice in oil catching a little bounce here. Love to see a breakdown of this horizontal, a retest and a resumption down. That would kind of line up with the CPI being low. Gold looks to have found its cycle low, so this is great. You can add here if you want to. You can add another position. This could be an add for sure. And I think if we can just move up into next week, then the stop from this trade will come up here. But again, not going to take on any weekend risk. I will update you as soon as I do that, but I am looking to add some positions here. I might add to gold instead and leave silver for now. This is not a position. This was an illustration. So again, go back and watch the videos if you want to see how I dealt with all of this. And this is likely going to gap up, so I think we'll add on a horizontal break, which is just essentially the exact same trade as we took the first time. So as we got above here, breakout, retest, resumption above the horizontal and go. So I think if we can gap up above here, then we can add there. Again, I'll notify as soon as I do this. So make sure you're subscribed and turn the notifications on if you want to see that. Bitcoin, very good chance the cycle low is in for Bitcoin. So this would be day 56. So that is within the 10% tolerance. It can be 6 days either side of 60. Again, I wouldn't be surprised to see just a drop back down into a cycle low, into a more perfect 60-day cycle low, perhaps on the Monday or Tuesday before the CPI print. But if this continues to move higher, then we will have to entertain just taking a long. But I do want to see that print on Tuesday first. So again, not looking to chase this or anything like that. Ethereum kind of doing the exact same thing as Bitcoin. Maybe the 56-day low for Bitcoin signaled the low for Ethereum. If we can get a big trend line breakout of one of these, then this can be an add. But again, I do want to see Tuesday's print. After Tuesday though, I think it should be, as long as that print is low, we can just put risk on every single one of these trades I've shown you so far. So that is my plan, and I'm sticking to it. Noticing the yields kind of stalling up here. So will it, won't it? Again, all comes down to Tuesday. That is the analysis from me. Hopefully there's some trade ideas there for you, and I am looking forward to putting some risk on as of Tuesday. If you found value here today, I'd appreciate it if you could drop a like on the video. It actually really helps. Or just throw a comment down. You can hit dislike if you dislike as well. That counts the same as a like. I'd appreciate any of that. If you've got anything you want me to cover over the weekend, throw it down in the comments. And in the meantime, I hope you enjoy your weekend. Have a great day. All the best from me. Cheers. Bye.